Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Tesla Thursday. It should be on a Tuesday. Sorry, it's a Tesla Wednesday. Fantastic day out there for Tesla and Elon Musk, as I see Thomasina saying. Elon is the man. Absolutely, and it's not just the top line numbers that everyone looks at. We'll look at two of those numbers here in just a second. It's pretty much every single thing in their report, which I'll show you that here. If you guys want a copy of the report, just let me know and I'll drag it in the chat so you guys can have a copy of it. But man, incredible day for Tesla, at least from a numbers perspective. And Kenny, yeah, I got to agree with Big Eb. They're a baller. I against my better judgment today, typically I don't trade earnings at all, but you guys know I want to hold Tesla. I want some Tesla in my portfolio after my shares got taken away on those covered calls. So I did sell a bunch of puts this afternoon. I sold the 195 strikes, and I collected 203 in premium on those expiring Friday. So I didn't feel too worried about that at all. I was kind of hoping it would have dropped and I would have gotten it. But hey, I'll take over 1% rate of return for 2 days, and I don't think we'll get down to 195 by Friday. So those will expire worthless. But I did decide to take a chance at it. It was a little sketchy, but 195. So I mean, you look at the price chart at 195 is so far off. And here is the S&P. But let me go and show you just kind of the setup for that trade, and then we'll look at the actual numbers here in a second. So the 190, that's the 199s. That's what I was thinking of doing yesterday, but this afternoon I looked at it and the 195s are an even better premium and it was farther away, less risk, so I just decided to go that route. That's where that strike price would have been, which is kind of this cluster of price that goes back into early August. As you can tell, right now we are much higher than that. We are at this little dashed blue line up here. I think that's blue line. Right at $233 per share. I'll show you on a 5-minute basis so you can see the jump in the after hours. There was no hesitation. There was no even head fake sell-off. A lot of times there's a sharp move down and then it, rips up to the upside. This was a nothing. It was a no head fake at all, just straight to the upside, and things looking really, really good. So you saw here, I have the graph for today, Elon Musk holding a trophy, because I do feel like he's just the champion again and again and again, and everybody that bets against him gets absolutely clobbered, which I've made a mental note to myself. I'll never bet against Elon Musk. Regardless of what he's doing otherwise, his businesses always seem to do pretty darn well. Tesla says gross margin getting respectable. I need to get in again. Yeah, that's what I've been saying. I need to get in. That's why I wanted the 195s, but it wouldn't let me in. Anyway, what were the numbers? So here's the two numbers that most people are referencing. The earnings per share is that everyone's really focusing on, which is they came out at 72 cents. They were expected to come out at 58. That blew past expectations. Now on revenue, it was less than expectation. Now they grew 8% year over year on revenue, but analysts expected slightly more. They came out at $25.18 billion. They were anticipated to have 25.37. So, a little bit of a miss there. But here's where, I didn't have time to break apart every single line item here and show you, but I'll see if I can do some of that here. If we look at, John says I'm in at 220. Yeah, well, you're probably doing okay right now. We'll see what happens tomorrow. The revenue numbers were less than expectations, but I'm going to show you the numbers here in a second, and hopefully you guys can see them. I know it's really small and hard to read, but if you look at year over year, I'm really going to focus on the year over year column here, and you see almost everything is showing very respectable numbers. One that really kind of struck me is this free cash flow down near the bottom. So their free cash flow increased 223%. year over year. I mean, that means they've got a lot more money to work with. That's fantastic, right? You'd love to see numbers like that. And you're probably looking at this number here that I'm highlighting. It says operating expenses. You're like, oh, negative 6%. Yeah, that's right. It's because they're getting more efficient. Their operating expenses dropped 6%. And, as a business, if you can increase your productivity, if you can increase your sales, if you can increase your revenue, and at the same time decreasing your operating expenses, these numbers start to look better and better and better and better. So, I think most people are going to focus just on the revenue numbers and the earnings per share, but it's these numbers here, like operating expenses getting so much better that I'm looking at going, wow, this looks fantastic. I mean, adjusted EBITDA of 24% gain, that's pretty fantastic. Year over year growth of 24% on EBITDA. Excellent. Now I'm going to scroll down a little bit here. I could go through again line by line and run through these to you, but I just thought it'd be interesting to pick some of the big ones. So if you look at storage deployed. So now they're talking about energy storage system, 75% increase there. You had the Model Y production increased only 6%. Other models production increased 91%. Of course, I think that's skewed because you have some vehicles that weren't created last year. Supercharger stations, 20% increase year over year. Now, the reason I say this supercharger stations being built is this isn't just a Tesla thing. If you look at the numbers, a lot of other vehicle companies are saying, listen, we don't have the time, the energy, or the resources to build an infrastructure of electric charging stations around the United States and possibly the world. However, Tesla's already got kind of that taken care of. We'll just use their stations. So now you kind of have, I guess an analogy I might make here is, imagine if you had gas stations and it's at the very beginning of petrol-burning vehicles, and nobody's got a gas station set up anywhere. And all of a sudden, Texaco comes along. And Texaco all of a sudden starts creating gas stations all over the place, putting a ton of money into gas stations. At a certain point, everyone's just going to go to Texaco because that's the only show in town. Now, other companies could jump in there and compete with them, but it's an incredibly high barrier to entry at this point now that people are using Tesla or the Texaco infrastructure. So I think this is a pretty important one as we go forward, as more and more car companies will be using Tesla's charging stations. And you can see those numbers looking pretty good from a growth perspective. So the financials, guys, I really can't pick this thing apart here. One thing I did notice, and it's going to take me a second to find this, they talked a lot about the AI side of things, and there's a lot of charts in here at the end of this. So to save you from scrolling madness, let me see if I can go in here. I want to go into the AI type of stuff. There's software and hardware. So they have logged more and more and more miles on this self-driving car, which is, in my opinion, what gives them a huge competitive advantage in the AI space. I think at some point what you're going to get is Tesla's going to be licensing out their AI technology to other car companies because they have all the data. I almost found this number to be confusing. Like, how could you have it that large of a number? And here's the number I'm referencing. You see here it says Tesla AI training capacity ramp through year end. That's H100 equivalent GPUs. So the cumulative miles driven has been getting, you're looking at billions of miles. As of September of this year, you have the V12 miles. FSD miles is 1 billion miles. And if you look at the FSD version 12 miles, you're at over 2 billion miles. If you look at the training capacity, this is where it's really interesting. This is with those H100 chips. I believe the number I saw was 50,000 of the H100 chips. You can see right here, we deployed in our training ahead of schedule on 29,000 H100 clusters at the Gigafactory, Texas. We're expected to have 50,000 H100 capacity by the end of October. Holy cow. I mean, you have some people who are just trying to get one of these things. And here is Tesla with 50,000 of them. So there's two things to take away from this. Number one is the AI dominance, in my opinion. You guys can disagree, totally fine. The AI dominance I think Tesla is going to have, which not only will benefit the transportation industry from retail vehicles to commercial trucking, but also the AI for Optimus, the robot, and starting to put large language models together there so that Optimus can now function in society as an android robot using their AI. They have the infrastructure to build it all out. And second piece here, when you look at that number, I'm pretty sure everybody's going to say one company. We deployed in our training ahead of schedule 29,000 H100 clusters at Gigafactory, Texas. Expected to have 50,000 of those by the end of October. That is literally a week away. They're going to have 50,000 of those units. Who benefits from this? There's one company, guys. And that says, we look at the chart and wonder in dismay, like, what can NVIDIA continue to do? If you've got just Tesla buying 50,000 of these things, I expect NVIDIA to keep on moving up and up and up. Yeah, Big Eb, this is the picks and shovels. This is the AI gold rush. And right here in this statement, Tesla's talking about the AI gold rush and how they're mining gold out of it, right? They're getting it from the FSD. Well, NVIDIA's right there saying, you want to collect all that data, use our stuff. And so it'd be interesting to see. Let me real quickly do the numbers. This is going to be broad numbers. Let's go H100 price, NVIDIA. Let's see how much one of these things is. So an H100 looks to be, really depends on where you get them. I'm just going off of, it looks about $25,000, okay? So let me bring up some numbers here, and we're going to go $25,000 times 50,000. That means you're looking at $1.25 billion just from Tesla. Just from Tesla going to NVIDIA. That is phenomenal. Obviously, NVIDIA is going to reap some serious rewards from that. And when I do read through these statements, which I don't do a lot, Tesla's I do because I'm interested to see what areas of businesses they're going to be growing. Remember, Tom, who was one of our regulars here, he was always pointing out that Tesla's a car company. Their valuations are really high. They're going to come back in line with other automakers. And I pushed back repeatedly on that one, saying, look, I agree with you. However, the company itself has battery storage, battery production, solar power. They have AI. They have robotics in Optimus. And they have cars, self-driving cars, robo-taxis. I mean, this is not your run-of-the-mill car company, and I think that's why it deserves a valuation that's much higher than a typical automaker. And when you look here, you can see where the push is. The push is certainly going into AI and future technologies that are going to continue to give this one the big lead. So, love it. You talked about their batteries and power. I mean, this page after page after page of charts that just get better and better and better. I like this one, energy and services and other gross profit. You notice they've been surging in energy and services. Energy storage deployment, right? Getting more and more battery power. We talk about infrastructure not being able to handle the demand. Well, Tesla's pushing that. So, you become the leader in capacity for us. Everybody looking for electric? Great. So all in all, it's hard to look at these numbers today and find any real weakness with what with Tesla posted. So great. I'm very disappointed that I am not long. I'm happy at least I got a little over 1% for 2 days on those puts, but by some miracle maybe I'll get exercised at 195 tomorrow, and I'll be very happy with that. But it's not going to happen. I think we'd all agree it's probably going to continue to move up. So now the question on Tesla is, where does it go from here? So obviously, oops, that's not the chart. So obviously, when you look at this, it's been kind of chunky for the past couple of months, right? At least going back into May, it's been on a nice uptrend, but you got a double top has formed. We talked about that one as a potential short opportunity. It sold off. Now all of a sudden, it's jumped back up to 233 in the after hours. The question is, does it charge and get back up to this line right here, which is where it struggled at about 265? I do think it will. I think it's going to kind of get to that level in the near future. I think optimism based off of these financials today looking great. And ultimately what that does is that starts to break it out of this kind of sideways chop. If we can get above those, $300 mark, then all of a sudden you're challenging all-time highs, and at that point it's off to the races. And again, we haven't even released the robot yet. We haven't officially gotten FSD approval. As soon as FSD gets federal regulatory approval and a green light to go across the United States, I don't know. I think there's a lot of people, and I'm in that camp. I'm curious. Let me see if I can do a poll. It's a tough one to type in because it's a long one. Let's start a poll. Let's see here real quick. If FSD is, sorry for the cryptic message, Fed legal, would you buy Tesla? Okay, so in this question, I put if FSD, which is the full self-driverless car, is federally legal, meaning you can go anywhere in the United States with a driverless vehicle, but Tesla's the king of those and really the only show in town, would you buy a Tesla? Now, I'm just curious what your guys' thoughts are. I know some people, I actually love having a manual-powered vehicle. I like having my stick shift, and I like having my gas-guzzling car, and I like driving. However, I live in an area that gives me a lot of recreational choices. For example, I could be at the beach in 10 minutes. I could be in the mountains in an hour and a half to 2 hours. I can be in Las Vegas in 4 hours. I could be back in the Bay Area in about 6 hours. I could be in Mexico in 2 hours. All of those destinations are totally achievable with a driverless car. And if I could have it where my seats turn around, go with my friends to these places, not have to drive, I would put myself in the most likely yes category if FSD is all the obstacles are cleared and we can now be driving those. And I know a lot of people might be apprehensive to that initially. I don't know. I've got a couple friends that have them. I've seen it work. I've tried it out. It seems to be pretty cool. Let's see. Needs to be a maybe choice. No, Lisa. Definitive. Yes or no. There is no maybe. Well, I didn't have time to put it on there, but yeah, maybe a maybe. I'll let that poll ruminate for a little bit and let you guys vote on that one. Let's see. The energy business looks promising too. Yes, John, that's one of their charts that just looks like this. And at the end of this report, let me see. There should be. There we go. So at the end of this report, which you can download, and again, if you want, and I'll just drag it into chat so some of you can have this one. 1 second real quick. Let's get that out of there. And let's put this in here. Can I copy in there? Oh, I can't copy it into chat. Sorry about that. If you just go Tesla reports, you'll see it. Maybe I'll post it on Twitter if you guys want it. It's a good one. But anyway, when you get to the end, you get a lot of really interesting numbers that I think some people quickly overlook. One thing I noticed on this chart right here, on the right-hand side, you see net income and adjusted EBITDA. We've started off in Q1 very low, and these last 3 quarters have been fantastic for Tesla. You're seeing their numbers increase on both EBITDA and net income. Nice trend to the upside. This is what you'd want to see as a Tesla shareholder. Increasing revenues and net income. Then you got page after page. Vehicle deliveries. You've got, this is trailing 12 months, same one. Anyway, I could go through this for hours because I find it fascinating how well they're doing. And I'm one of the ones that early on was a skeptic. They were in so much debt early on. I was like, they're not going to get out from underneath that mountain of debt. And lo and behold, they did, unfortunately. So I missed that boat as well. All right, let me see. What do we got here? Can you trust your car to the man who wears a star? The great big Texaco star. I could trust the car. Sure. I'm not trusting the car. I'm trusting the AI. I'm trusting the way that it's programmed and coded. And certainly, I think in the first while, I'd be apprehensive to it. I don't care who creates it. It's not about the person. It's about the product being the best of the best. So, will Elon have an issue installing the chips in his China plant? Possibly. I'm sure the Chinese government's going to have something different to say about that. Right? I'm sure the Chinese government will be a little more controlling. But, at the rate it's going now, particularly with the influence that Elon is trying to have on the election, if it does push through and obviously he's a big supporter of Trump, and Trump's the type of person that I think if he becomes president, he'll greenlight a lot of this stuff knowing he can get a cut of the action. So, yeah, I think Elon Musk knows that. That's why he's kind of backing it up. And we'll see. We'll see see what happens in November. James from Invest Answers has done about 2,000 miles of FSD in his Cyber truck. He said it probably saved his life as he was driving at night and a deer ran in front of him. It's faster than you and I can be from a response time. It sees things coming that we may not see. So, yeah, I think in the data I saw, Mike, what was very interesting for me there was I forget, well, it wasn't the AI day. It might have been AI day. But they were going through the logic of FSD, and they had the developers on stage, and they were breaking down, how it works, how it functions, and then they started running through the safety numbers. And it's like 100 times safer than a normal human driver because it's taking in all the information. There are 0 distractions for your AI, whereas we've got cell phones and kids and, look at the airplane, all that stuff. It's not going to impact your AI. So, in that case where James from Invest Answers says it saved him, I believe it. I believe a lot of people are going to have that same situation, whether it's a small fender bender or a catastrophic accident. Toby says, I won't buy the car. I'd buy the robot. Yeah, I'd definitely buy the robot, and I'll probably buy the car. I'll probably buy the car. If it gets full FSD, I'm one of these people, I don't really drive that much anymore. I used to drive to the office all the time, and now that we don't really go to the office too much, I'll probably start going a bit more. I'm probably driving. This is going to freak everybody out here. I'm probably driving about, I would say 3 miles a day. Probably 3 miles a day, if that. I don't really go anywhere. I could walk where I need to go, ride my e-bikes. There you go. All right, poll results. End the poll. 50-50. Half of you said you would, half of you said you wouldn't. Oh, cool. All right. Very few of you actually reported in that poll. I'm surprised we had such minimal participation in that one. But yes, there should have been a maybe category in that for sure. Let's see. I think I'll only ever buy a hybrid because I need the ability to have gas just in case the grid breaks down. That's a good point, Mike. And that's been one that I'm skeptical about as well is, people complain about fossil burning vehicles and gas stations. I love it. Gas stations are everywhere. The infrastructure is there. Now, what if we get to the point that electric charging stations are as prominent as gas stations? What if Elon Musk works some deal where he says to Arco and Shell and Chevron, hey, listen, I'll give you, I don't know, $1,000 a month if you put a charging station in your gas station, right here, just right there. Now, of course, I don't think a gas station would do that because you're encouraging alternative vehicles, although they may sell products at the convenience store during that charging process, so it could be beneficial. You start working relationships like that, and then all of a sudden you open up that grid of electrical connectivity for EVs to current infrastructure. Now we might be talking convenience that you're probably looking for, Mike. Certainly, the people talk about the grid breakdown or vehicle breakdown. And technically you have fewer moving parts in an electric vehicle, so there's probably less breakdowns than you would get with a traditional vehicle. And you will need a bicycle with a cute little basket. I do have a basket. No flowers. Toto doesn't have a lid on it. Toto's not riding in the front. And my basket's not in the front. I have a little basket in the back. It's a carry-all. It's a milk crate, okay? I'm not going to call it a basket. It's a European bicycle satchel. Buy then other cars. Will this catch up? BMW for me. Well, I wouldn't buy a BMW. I'm from Bavaria. I was born in Munich, and I don't think I would buy a BMW just from the maintenance side of it. I like Toyota because it's cheap and easy to maintain and very reliable. Power driven. All right, you'll get a new participant here. Gas stations also run on electricity. Everyone forgets that they run it. Yeah, exactly. They're now building more gas stations here in New Jersey than ever before, supersized ones with convenience and delis. It's very European. When I lived in Italy, a lot of the gas stations, particularly on the autostrada, which are the big, major thoroughfares, the interstates, they have these, you pull over and you get everything you need. Gas stations, all kinds of meals and restaurants, and they're in the middle of nowhere, just pop up. We'll have to probably see more and more of those. John says, hopefully we'll be able to solve some of the cold weather performance issues or hot weather performance issues. It was bad in the Midwest and Northeast last year. Lots of abandoned Teslas. Oh man, bummer. Yeah, they'll have to improve on it, right? And again, I still think we're in the infancy stages of EVs. We're still learning, still developing. We'll get better battery technology, better retention in batteries. All right, so that's it for the Tesla thing. We've gone on with that one a long time. Holy cow, 25 minutes. I wanted to wrap this show up early today because I just have too much to do. I want to go to two pieces of economic data today. So the only trade I made today was on Tesla. The put option today was on Tesla, and that'll expire Friday, worthless most likely. And I did do an intraday opening range breakout trade on the S&P, which is a nice trade. That was a really good one going there. Let me go to your economic calendar here because I want to show you a couple charts because the next piece is, oil inventories. We had our crude oil inventory data come out today, and the numbers surged significantly. I mean, we saw a real big jump in that from negative 2.2 million barrels to a surplus of 5.5 million barrels. That's a swing of 7.7 million barrels of oil in a month. But it's phenomenal. Absolutely phenomenal. So here is your, in a week. My bad. I was like a month. This is a weekly report. You look at the numbers here, and yeah, it's a huge jump up, which is a good sign. If you really look at the low from July of this year, where we had that real big drawdown of 12 million barrels, it got a little bit better, and now it feels like things are starting to move to the upside. If this does continue to move this way, it does lead to lower oil prices. If we see this above zero and continue to trend higher, more surplus means we just don't need as much. We're not going to be paying as much. Supply is increasing, therefore, unless demand surges, prices of oil should drop. And if you look at that price chart of crude oil today, I'll bring this one up here. Here's my CL. Down 1.35%. That's what happens, and there you go. We're still stuck in this kind of choppy range with some higher lows being put in, but keep your eye on that crude oil inventories. If you have two factors here. Number one is our inventories in the U.S. have been increasing. Number two is peace talks. If we get peace talks and conflict resolved in the Middle East, then That will calm a lot of fears. Oil will become more stable. Production will become more stable, and we'll start to see the inventory numbers go back up across the board and supply numbers. So this is one of those pieces where, are we at that turning point where crude oil is going to start to drop more in price? And the price chart longer term, going back into 2022, says it is going to drop. We were seeing some optimism over the past few months, September, October, into November here. Looks like we're making higher highs and higher lows, but keep your eye on these low points, right? We've got this low tail back from October 1st, which is down around 66.33. Right now we're at 70.77. So we're close. Ultimately, I think the breaking point is going to be this low from September 10th, and that low point was 65.25. Okay, last part, and then I'll go to some questions, economic calendar, and wrap things up. Housing sales. This is why you got to be careful reading the news, because Yahoo ran an article today, said this is the worst existing home sales number in the last 14 years. We've never seen a number this bad in 14 years. And I wanted to reach out to them and say, are you sure? Have you looked at the charts? Because we actually have had worse than this. So let's bring up our existing home sales. We came out at 3.84 million, which was kind of my expectation that we're not going to beat that 3.88. Here's the chart. So let's go back 14 years. It takes all the way back to 2010. So when you look at this, you're looking at, here's a low point in August of 2010. That number was 3.83. 3.83. Now I'm going to zoom in just a hair here so make it look a little bit better. We had another number in 2020. That was 3.91. Zoom in a little bit more to really see it. And then here's our 3.84. And of course, Yahoo Finance, which I'd love to know the clown that wrote the article, because you can't say it's the lowest number we've had in 14 years, because it was 3.84 is the number. Well, look back here in December of 2023, it was 3.79, and then 3.82, and then 3.78. So you had 3 consecutive months where we're actually worse than we are today. The point here is it's looking a little bit weak. You got this downtrend going. We had the similar thing happen back here in from March of 2023 all the way down to those lows in November, and it feels like we're going through that path yet again. That means, based off this, that we should see it start to bottom out here in November and December, and into January, things start to spike up again, if these patterns are going to repeat themselves. So I thought that would be an interesting one just to look at here, just because of the trends that are in place. Again, interest rates are going to be a big factor into this. And on that note, let's go talk about interest rates today. You can see that 10-year. I'm going to leave this red line on. I understand that this is not probably not where it's going to go. I don't see it going up to 5%, but that was an analyst for T. Rowe Price gave it their estimate target of 5% for the 10-year by the end of the year. So I'm just going to leave that there just for fun. I think maybe we'll get to 4.5%, but I don't see 5% on the table anytime soon. Anyway, the trend is still strong. We had an up day today. It was a pretty nice up day, and all in all, that trend looks fantastic, the upside. So the more this goes up, the more likely those numbers are going to get worse and worse for existing home sales. Because the 10-year is signaling inflation, rising inflation again. Yeah, it is. Yep. No argument about that. And gee, good thing we cut 50 basis points on our Fed funds rate just to juice up that inflation for a little bit. All right. I'm going to go to these questions here and make sure I get them all correct. It's not an or statement. We need both oil and clean tech. Yep, I agree with Ricardo. I would go electric if I could get a 600-mile range. For now, I'm a strong believer in plug-in models, the hybrids. Yeah, I certainly would like better range, but if I'm going to drive to NorCal, which again is a 6-hour drive, I'm going to take my truck. I'll probably have one of each vehicle. Have an electric, and I'll have an electric vehicle, which is just simple, convenient, get around, driverless, and then I'll have my truck for utility, moving, picking up all the wood to build my new couches. Oh yeah, what a pain that's been. Merlin, have a great birthday on the 26th. Oh, well, happy birthday tomorrow, Chio. Scorpios, unite. Yes, thank you. I'm looking forward to it. But you can't give me a preemptive birthday. I might not make it to Saturday. So let's hold on, get too excited. But no, I appreciate it. Thank you guys so much for the birthday wishes. Obioma, good to see you, my friend. Hope all is going well in Lagos. All right, so that was your first piece, was the crude oil. And we went to the 10-year on that one. I'm going to start at the bottom and work our way to the top. Of course, the the numbers have changed here a little bit just with what's gone on in the after-hours session with NASDAQ recouping a bit of its losses. Okay, Bitcoin. Okay, we were down 1.67% today. I know a lot of people were freaking out about this one. It was down more. Why? The chart, there's nothing to worry about. The chart still looks fine. You got an uptrend going from August 1st. Higher highs, higher lows. Go, 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 go. All right, NASDAQ. So NASDAQ, you can see that bottoming tail here on today's activity, right? It was a longer bottoming tail, and now all of a sudden with Tesla, that's spiking this to the upside. But before we dive into those numbers, I wanted to run through some of our Magnificent 7 here, which were not so magnificent today. Meta down 3.15%, breaking below some key levels, and I may look at selling some puts on this one again. NVIDIA, 2.81% slide, although that chart looks fantastic, still looks strong. Amazon down 2.63%. Choppy, sideways, kind of pennant formation since September, so no real clear direction there. I still want to own Amazon. I just haven't found the right price. Apple down 2.16%. Still looking great. As of a couple days ago, Apple came right back up to those highs, smacked it, sold off again. We'll see if this one continues to the upside. What is important is that uptrending line, which is pretty much there. We're pretty close to it. Tail off that one today. And then Tesla, we already talked about Tesla, which it was down 1.98%, but in the after hours, up 9.43%. Love it. Google, sideways, choppy. I still see the inverted head and shoulders pattern here, but we'll see if it comes to fruition. Right now, it feels like a month of nothing but sideways, down 1.4% today. And finally, Microsoft, 0.68% gain, although nothing too exciting here. I do notice the uptrend that started back on August 1st, or right around August 5th, actually. Higher highs, higher lows. See if that continues as well. We need a Bitcoin catalyst. Margaret, I think the Bitcoin catalyst is going to be the election. I think the election is going to be it. John, Solana looked great today. Solana and SWI have been really interesting. I don't know if many people here understand what SWI is or how they function, but in my crypto class, I was asked several questions on different cryptos, and SWI has definitely been one of those. And I'll zoom out here because you can see Solana. It looks great over the past few weeks, but it really has not done not done much. I mean, it's really been a year that this thing has done almost nothing, just traversed sideways. And granted, it's between $130 and $200, so $70 is plenty of opportunity. But look at the chart. This is a layer 1 technology, guys. This is something that competes with Ethereum, and it's much faster. You look at SWI. You've had a much bigger, more pronounced run in SWI over the past couple months. I mean, it was down around 50 cents, topped out at over 220. So SWI and Aptos, let me see if I can bring up Aptos, are competing firms. Do I have Aptos? Yeah, Aptos isn't doing as strong as SWI. And again, it's about adoption. It's really about, people using these services. So you can buy all the crypto you want of different projects, Ethereum, Cardano, Avalanche. But if you're not using them, if you're not utilizing the network and causing them to grow, then those networks will slowly shrivel up. A lot of people ask me, well, why do you carry Bitcoin around? If you know Bitcoin's going higher, or if you feel Bitcoin's going higher, why would you spend it at a restaurant or at a store? Because I want to help that ecosystem grow. So I would encourage all of you that are Bitcoin fans or crypto enthusiasts, have an app on your phone. You could use a MetaMask, you could use Trust Wallet or Coinbase, and have just, a few $100s worth of Bitcoin on there. So if you do find a restaurant or a business that takes payment, just pay it. Am I worried about $100 worth of Bitcoin? No. I'll just go buy another $100 worth of Bitcoin down the road. But I'm using it in the ecosystem so that businesses open their doors and become more accommodating to it. The more that we see businesses use crypto, the higher the value is going to go. Significantly higher. So use it. Can you explain some of those cryptos on your list? Sure, Margaret. I don't have my phone with me. I really wanted to wrap this one up earlier today. Well, I guess let me just start by saying there's a lot of them on this list, okay? So I'll break it into 5 key categories for you. And to me, this is kind of the way you should build your portfolio. You have part of this category is what's called a store of value. Those are ones that are really designed to slowly go up over time. That could be digital gold. So you have one called PAXG, P-A-X-G, which is literally 1 ounce of gold. You have stable coins like Tether, USDC. You have international stable coins like the euro, the pound, the yen. You could park your assets in a foreign currency with crypto. And that, in a sense, would be a store of value. Obviously, if you're buying into, let's say, the yen, well, you want to see the yen price increasing. Therefore, your investment would grow in value if you were holding yen. So that store of value would be like a Bitcoin, Litecoin, things like that. Then you have what are called layer ones. Layer ones are like smart contract platforms. They are networks that allow you to plug in and build your business on top or use the services of that network. Ethereum is the number one layer one out there. They're the largest. They have the most users, most products, most applications are built on top of that. If I want to access any of those services, I have to use Ethereum. I have to use the Ethereum network. So the more utility that network gets, the better. Now, in that space, competing with Ethereum is Solana. I'll bring some of them up here if I can. You've got, I brought up Aptos, so this is one of them that's competing. You have Cardano, is another competitor to Ethereum. Scroll down here. You technically have BNB, which is a smart chain as well, but it has not done really anything. You've got Polkadot is another one in that category. You have EOS. Of course, you have Ethereum, which is the biggest one out there. Many others in that space. That's your second pie slice. Your third one is probably my favorite, and this is the one that I like to, I definitely like when our students, we go into analysis sessions on these, is finding targeted projects. A targeted project says, this is something that's missing in the finance or business world that we're going to build on top of one of those blockchain networks, on top of one of those smart chains like Ethereum. It's designed to achieve a specific task. So for example, I always use this one called LivePeer. LivePeer allows you to stream using this connected computer as opposed to using Amazon Web Services, etc. So 1/50th the cost. So if I was going to spend $50 to stream a show on Amazon Web Services, I could spend $1 and use LivePeer to stream it through decentralized computing, and I'm not censored. Already a huge benefit. Most people don't know about it, so they don't use it. But as time goes on, maybe more people will use it. Render, which is what's used in the Apple goggles to create not generative AI, augmented reality, where you can put 3D images in your room and interact with those things. That's done using Render. Render is built on top of Ethereum. Now they moved it to Solana. You have things like metaverse games, Decentraland, Sandbox, Star Atlas. Those are all built on these different networks. So codependency on the network. So targeted projects. Next one's going to be oracles. Oracles are what go out and retrieve information from the external world and bring it back to the blockchain. So say, for example, Margaret, we make a wager on sports. And you say, well, my team's going to beat your team. And I say, no way. I'll take that bet. And we bet $100 each. We put it into a smart contract. That money is in that smart contract. And if your team wins, it automatically pays you. If my team wins, it automatically pays me. The thing is, how does that smart contract know who won? It doesn't. So the smart contract uses what's called an oracle to go get that information from the outside world. The oracle will find the information of who won that game, report back to the smart contract. Smart contract now pays us. So oracles are critical in the growth of DeFi marketplaces, decentralized finance, and this whole ecosystem of investment vehicles. And then the last one's the gambles, the shit coins, the ones that don't do anything. They're garbage, they're scams, they're pump and dumps, they're greater fool theory. Of course, I'm talking about Shiba Inu, I'm talking about Pepe Coin and Floki and Bonk, and there's hundreds of them. Hundreds. Actually, if not thousands of meme coins. When Trump came out with this World Liberty Financial, I'll just show you here real quick. It's not even available yet, right? It's just in a token sale. Let me bring up CoinMarketCap for you. So this is a resource for everybody if you're interested in looking at crypto prices. It's a pretty good site. But if I go WLFI, that's the ticker symbol for it. Look at how many knockoffs there are. World Liberty Financial, World Liberty Financial, World Liberty Financial, World Liberty Financial. They're all the same ticker symbol. None of these are the real deal. These are all fake. Now, they even use the same logo. So this one down here and the top one are using the exact same logo that WLFI is using. So a lot of it, crypto is so full of scams. You got to be really, really, really careful. Not only is I believe this project is a rug pull, I just don't trust it, but most of crypto in general. Dogecoin, Dogecoin has just fanfare because of its story and its age. Does it have utility? Not much. It's striking to me that it's still one of the most popular ones. I think it's number 8? It's number 8. It's at a $20 billion market valuation, and it doesn't do anything. Cool. Great. Good for them, the people that created Dogecoin. But you have, this just tells you the stupidity of some of the people in crypto. If we scroll down here and look at Shiba Inu has a value of $10 billion. I could go through the architecture of how this was created, and you guys would see this is a scam. This is trash. It's nothing. There's nothing there. It doesn't do anything. There's no development. You go down here to somebody like Pepe Coin. On their website, they literally say Pepe Coin is not worth anything. It has no value whatsoever, and it's got a $4 billion market cap. Crazy. Do they report earnings quarterly? No. So, this is a misnomer. When you own those projects, when you buy the coin or the tokens, you're not getting any earnings. There is no earnings. There is no disclosure of financials. There is no disclosure of who owns it, who runs it. And this is why our regulators are concerned, is you just don't know anything about it. So if you buy Ethereum, there is no central entity that is controlling it. Most of these projects that you see here, so we look at Aptos, you look at Litecoin, you look at Near Protocol, Polkadot, Chainlink. Chainlink's a bit more centralized, but Avalanche, Cardano, Solana, Ethereum, these are very decentralized networks. They're very decentralized. So there is no one person that controls it and is reporting the earnings because there isn't an earnings for it. The network itself just functions and the money gets distributed back to the participants of the community. So it's a different model that we're used to. And who knows how that infiltrates or changes or augments traditional finance. But I think we're going to find out. And a big circulating supply. Yeah, don't worry about the supply so much. Remember, you can create what is circulating supply. So I'll show you here real quick. If you look at something like Bitcoin, didn't mean to take this down the crypto rabbit hole, but here we go. So we know that in time, that the maximum number of Bitcoin will be 21 million. You can see that right here. That is in the year 2140. We know because it's a very, you can see the emission schedule. You know exactly how much Bitcoin is being created every day until the year 2140. Right now, of that 21 million, 19.77 million have been created. That's the total supply right now and the circulating supply. But if you look at something like XRP, which is Ripple, it's the 7th largest crypto out there. It's got a market cap of $29 billion. You can see here the maximum supply is 100 billion. That's how much there is total. Right now, there's only 56.7 billion of that out, which means that there is 43.3 billion Ripple that has not hit the market yet. So that's the total is everything that exists. Circulating supply is what's available to us to buy and sell right now. Think of it as like outstanding shares is everything in a stock. Float is what's available for you to trade right now. And we've seen that on some companies out there where the float and outstanding shares are very different. Let me bring up the one that I love is it's almost a meme coin. But if we go to VinFast, right? You guys remember VFS? When you look at this one, we'll go to statistics. And you can see here, outstanding is everything. That's the total, 2.34 billion. But float, just below it, is what you can buy or sell in the open market. So this stock has 49 million that people can buy and sell right now, but the total that exists is 2.34 billion. That's like inconceivable number difference there. It's like 90+% of all the shares are still held by the insiders. And the reason that should freak you out is if they decide, whoever owns those 90+% of this VinFast tokens shares decide to sell right now, the price will absolutely implode. It will go straight down, right? It'll go down faster than P. Diddy. Now that's fast. Now with crypto, it's a similar situation, although you need to look through the details a little bit. The company or the entity that owns this 43.3 billion Ripple is called Ripple Labs. It's the company that is responsible for the development and building. Ripple is a centralized project. It's not decentralized. It's run by about 4 different entities. So this is, a bit different. I'm not a big fan of it. I do own Ripple. In full disclosure, I own Ripple, but there's a lot of other competitors out there that I think are better, that will do a better job, and they're not involved with SEC lawsuits like Ripple is. So If Ripple Labs decided to sell that 40 billion tokens that they have and put it on the market, it's going to crater the price of Ripple. That's going to go way, 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 way lower. All right. Sorry. There we go. That's a quick rundown, Margaret, of just the fragmentation of crypto segments. And that list is not in any particular order, but it does have components for every one of those 5 slices of the pie, if you will, as far as how I allocate and build out a portfolio in crypto. But are these meme coins used to trade profitably? Look, you can trade them. It's just a greater fool theory. You have no information to go on. There's no real logic towards why they move other than a pump and dump. So when someone goes on social media that has an influencer or is a follower or has a following, and they say, oh, you got to buy Pepe coin right now, let's do it. You get this collusion. It jacks prices up. Prices run. Then they end up selling. And so if you have a big enough following, you can manipulate this and make a lot of money. But I don't touch it. I feel like it's disingenuous. I feel like it's a disservice to the crypto community because it's fraudulent. It's worse than gambling in my opinion, but to each their own. Should be any rules. I give large trails and do well. I don't want to get caught up in the dumps. Yeah, well, that's the problem. If you have a large trail to stop, you can get caught up in those dumps, right? Okay, let's go with your economic calendar because I got to go paint some couches here. Polyurethane, ugly stuff. Not a big fan of polyurethane. I'm going to be covered in here in about 15 minutes. Let's see. Let me go to what's happening for mañana. We have a lot of stuff happening. Actually, you have the manufacturing and services numbers for France, Germany, the EU, the UK, and then for the United States. That's going to happen right around 6:45 in the morning is when we get ours. But also, big number before market opens. That's why a lot of people are looking at the unemployment claims numbers. I'm not too concerned because if you look at the chart, it has been rising, although we had the drop last month. I'm not so concerned with this one until we start to see much higher numbers than 250. You have, what else? New home sales. So we had existing home sales today, which were dismal. You have new home sales tomorrow. And then on the earnings front, here's what we've got cooking for earnings for tomorrow. The 24th, Gio's birthday. You've got Western Digital, Valero Energy, American Airlines. There's our defense play again with Northrop Grumman. That's been, see if they get crushed like we saw yesterday. UPS, Honeywell. You've got Southwest Airlines, Union Pacific, Save Air, Spirit Airlines, which, by the way, man, what a chart today. After they had talks with Frontier again, their price went absolutely ballistic. 45% gain today in one session. Man, shoulda, coulda, woulda, right? Would love to have been there. All right. That's going to do it for me, everybody. Reminder, tomorrow will be the last show of the week just because I need to clear my plate on Friday to get a bunch of stuff done. So if you got something you want to discuss for tomorrow, let me know. Send it on in, tradermerlin@gmail.com, or put it down below any of the YouTube videos. I will see those, and I will see you guys on tomorrow's show. So thank you, everybody. See you tomorrow.